Welcome to Global Real Estate Dealmakers with Kyle Ney, showcasing investors and entrepreneurs across the globe who are leading innovative commercial and residential real estate projects.
Hey there, listeners and viewers. It's great to have you back here for the April Kyle's Take. I'm coming to you today from Scottsdale, Arizona, where I've managed to find a hotel that's still back in 2019. I can't say that the mask adherence here is the way it is in other parts of the world, but in that context, it gives me hope that the global population is gradually going to get out of this, if that's any indication, the way people are interacting here in Arizona. With that said, I'm going to get into the breaking news for this episode, and I'm going to relate most of it to Turkey, which is where the most recent guest that I had on a normal episode, which you can check out at kyleney.com. The last episode was with Firuz Soyuer, and according to Knight Frank, the global brokerage firm, Turkey posted the greatest growth in residential prices from Q4 2019 to the end of last year. Prices rose over 30% in the residential sector. To put that into context, on a global basis, and this data comprises 56 countries, prices rose last year in 2020 5.6%. Clearly, I've heard this in many different markets. It's very difficult for buyers. There's bidding wars, all cash offers, historical lows in inventory. I was actually having a conversation about that earlier today here in Phoenix. So an interesting environment in Turkey, to say the least, if you're a seller and buyer. The president of Turkey, President Erdogan, announced plans to proceed with the Canal Istanbul plan. The way that I understand this at a high level is that he wants to dig another canal, another waterway that bisects a portion of Istanbul, and this would allow the very heavy traffic through the current Bosphorus Strait to lighten up a bit, and so there would be another way to link the Black and Marmara Seas. He also announced that his goal is to slash interest rates down from nearly 20% down to single digits. There are other people who need to get in line with this, including the central bank governor, who I believe has been a bit more reluctant to move forward with that lowering of interest rate. But that portends some major changes in the real estate market in Turkey if that happens, based on where debt would price. Moving to the next point, summer tourism potential for 2021 in Turkey looks very strong. The country is expecting 100 million vaccinations to arrive by the end of May, and that means that most people in Turkey should be vaccinated before the critical tourism season starts. Turkey, therefore, is one of the countries with the lowest risk of infection coming into these, summer months. There's an organization, the Turkish Hoteliers Federation, that expects foreign visitors to reach 25 million this year in 2021 into Turkey, which is 55% of 2019 volume. That was 45 million visitors. The yearly tourism revenue in Turkey last year was $12 billion, which was a decrease of 65% compared to 2019. And as some of you who listened to the episode with Firuz may have heard, in the winter months in Turkey, everything locked down, no more so than in Istanbul. So the quarterly tourism revenue fell 50% from October of last year through December because of all the newfound restrictions that were implemented. Moving to guest insights, again from the Firuz Soyuer episode, I thought it was very interesting that he mentioned that there's little to no bank financing in Turkey because of the exorbitant interest rates that currently exist. And that's why I made the comment a minute ago about Erdogan's goal to lower interest rates. With that said, developers are able to obtain pseudo financing from buyers who come into projects and put down deposits in these strata sale schemes, very similar to the condo market here in the U.S. And therefore, you see the buyers and investors in residential property able to finance developers so that the developers don't have much equity that they have to come out of pocket with. So I thought that was fascinating. We also talked about, or Firuz shared, that entitlements in Turkey are not binding upon receipt. So you may go through the whole process with a development, get entitlements from the city government in Istanbul, and then they could revoke that at a later time. And to navigate those waters, it seemed to me that it was very important to bring on a local partner if you were foreign capital looking to do a development project in Turkey, especially in Istanbul. Lastly, I'll mention that most of Turkish real estate, as Firuz explained, especially in Istanbul, is comprised of private investors and not the institutional investors that you might see coming into a market like London or Paris or New York. And when you're looking at transaction data, it's very important to realize who the buyer was, because private buyers are going to be much more focused on things like the location and the architecture, and may look at other institutional metrics, internal rate of return, cap rate, discount to replacement cost. Those types of that type of analysis isn't as prevalent for private buyers, and therefore sometimes the transaction data can be meaningless unless you dig a little deeper to understand the profile of the buyer. Moving to poll results, so for those of you who visited the website at kylenay.com, I appreciate you filling out the poll. I had asked, once vaccinations are widespread, as is happening at different velocity throughout the globe, and people return to the office, what will be the expectation, especially among real estate firms, for in-office versus in-office versus remote work? And I would say that almost all of the answers were concentrated in one of the two responses that I had put on the website, either that it would be slightly more flexibility or it would be a hybrid model. And that echoes what I've heard in my own real estate circles of teams valuing the collaboration that comes on from being in the office, but realizing that the paradigm has shifted a bit and that there's going to be greater acceptance for doing work remotely, but if it's not the tech universe as much. I think that there's the desire to have more collaboration and a greater insistence that there'll be some in-office presence as opposed to an entirely remote workforce. The poll this coming month that I will put up, I want to ask how long all of you think it will take for global hotel revenue, since we were talking about tourism in Turkey, how long it will take global hotel revenue to return to 2019 levels. And when you look at total room revenue for 2019 globally, it was $550 billion, and that was up 2.5% from 2018. Clearly, the hospitality market took a precipitous dip last year with COVID-19. I know that ADR in 2019 here in the U.S., average daily rate was $131. RevPAR was $86. So I'm curious to see what all of you think is when that will resume at these prior levels. So I'll put up some different answers on the website, essentially by year, whether it's this year, next year, so on through 2025, and I will report back next month. My next guest, I'm excited. I'm almost done lining up the next guest, which I'll announce here soon. But I think we'll have the chance to talk about a geography that isn't one of the major markets in the world. So from that context, I think it'll be really fascinating, and I hope you will all tune in at that time. With that said, I am going to sign off from here in the desert. Thank you for listening or watching, and I will talk to you all soon. Thank you.
Thank you for tuning into Global Real Estate Dealmakers, the podcast that takes you around the globe to meet real estate investors who are transforming their local communities.